Welcome to The Explainer. Today, we're diving into Madison Square Garden Sports. Now, this is the company that owns two of the most legendary teams in the world, the New York Knicks and the New York Rangers. But here's the thing. While the teams are absolute icons, the stock has been a real disappointment. So let's find out why. Game on.
Okay, so let's get right into it. This is a real head scratcher, right? We're going to explore the paradox of how these celebrated, world famous teams belong to a publicly traded company that has, for a long, long time, underperformed in the market. I mean, how can so much value be hidden in plain sight?
All right, first, let's set the stage a little bit. Madison Square Garden Sports, or MSG Sports, isn't just any company. We're talking about the owner of the NBA's New York Knicks and the NHL's New York Rangers. And these aren't just sports teams. They are true trophy assets, recognized all over the globe. But that's exactly where the paradox begins. You know, as investment analyst John Boyer points out, there's this massive disconnect. The price you pay for a share of the company on the stock market doesn't seem to come anywhere close to reflecting the immense, real-world value of the teams it owns. So just how big is this disconnect we're talking about? Well, this is what investors call a valuation gap. And in the case of MSG Sports, it's not really a gap. It's more like a canyon. Seriously, we're talking about a massive amount of potential value that the market just seems to be ignoring. Okay, to put a number on it, analysts like Boyer estimate the company's true underlying value, what it's really worth if you add up all its parts, is over $400 per share. Now, keep that number in your head as we go to the next slide. And here is that contrast in black and white. So while the estimated value is over $400, the stock has traded at a price more than 86% below that. An 86% discount? That's just wild. And it raises a huge, huge question. So what in the world is holding this stock back? I mean, if the assets are so valuable, why isn't the price higher? Well, the answer really lies in one key factor that Wall Street has a very specific name for. They call it the Dolan discount. So, here's the crucial point. It all comes down to control. The company is controlled by the Dolan family, and the controlling shareholder, James Dolan, has been very, very clear about what he plans to do with these legendary teams. And this quote right here, this is the core of the problem for public investors. See, a full sale of an asset like a sports team, that's the single biggest payday. It's the ultimate way to realize its value. So with that option completely off the table, investors see very limited ways for the stock price to ever reach that true underlying value. And beyond just refusing to sell, there are other factors that make the stock less attractive. For one, the company doesn't pay a dividend to its shareholders. It doesn't use its cash to buy back its own stock, which would increase the value of the shares that are left. And on top of that, recent financial results have been kind of weak, partly because of higher team salaries and luxury tax payments. Now let's compare this to the other big publicly traded sports team, the Atlanta Braves. It's controlled by another media mogul, John Malone. But Malone's attitude is the complete opposite. He famously says the store is always open, which basically means his assets are for sale if the price is right. And because of that possibility, the Braves stock trades at a much narrower discount to its actual value. Okay, so if a full sale is off the table, is the game just over for investors? Well, not necessarily. Analysts have actually mapped out a pretty clear game plan with several potential strategies that could finally close that valuation gap and maybe, just maybe, make this stock a winner. So, experts have outlined this four-part playbook of strategic moves that could create a ton of value for shareholders. These range from some smaller, more likely steps to the ultimate, but for now, pretty unlikely game changer. First up, sell what's called a minority stake. This just means selling a small piece, maybe 10 or 20%, of either the Knicks or the Rangers. Doing that would immediately put a hard official price tag on the team's total value, and it would force the market to recognize it. And this isn't just some theory. The company's own COO has said they would never rule out this possibility. Here's another interesting idea. Break the company apart. You could have one public company that just owns the Knicks and another one that just owns the Rangers. The thinking here, as analyst John Boyer argues, is that these focused, standalone companies would actually be valued more highly by investors than the current combined structure. Now, here's a fascinating twist. There's a tax law change coming in 2027 that's going to make it less attractive for public companies to own sports teams. Basically, it limits some big tax deductions. So some experts think this could actually push the Dolans to just buy out all the other public shareholders and take the whole company private themselves.
So, what should you take away from all this? Well, the story of MSG Sports is really a classic Wall Street conflict. On one side, you have the immense, undeniable value of these incredible trophy assets. And on the other, you have the priorities and desires of a controlling family.
So, to sum it all up, MSG Sports has these priceless assets, but a stock price that's being held back by an owner who really prizes control over a sale. That said, there are clear pathways to a win for shareholders, and the pressure to do something might be building, thanks to a huge new catalyst, the NBA's next TV deal, which is expected to pour an extra $100 million a year into the company's pockets. And that leaves us with a final, pretty provocative thought. In the high-stakes game of professional sports and high finance, where team values are just skyrocketing, can an owner really afford to leave that much value on the sidelines forever?